What's going on, guys? It's GBP baby. Welcome back to another weekly review. I hope everybody's doing well, and let's get straight into things. So we're going to start on dollar as per usual. We're going to start on the weekly, and yeah, we're now in the month of November. In fact, let's take a look at the monthly. We're now in the month of November. First of all, generally speaking, we need to think about, are we expecting an up close month or a down close month? Now, generally speaking, I do want to see a down close month just because I've been bearish on a monthly time frame for a while now. And so if we go into this month with the expectation that we're going to have a down close month, that means that in the first few weeks, as in the first week or second week, we're looking for the high of the month to get created. And then ideally we want to see price start to turn around mid-month and start to deliver to the downside. Now, how far are we from elections? Let me have a look. So US elections are on the November the 5th. Oh, this Tuesday. Wow, guys. I've never been in the charts. I've never been in the charts during election. This is the first time I'm witnessing an election whilst in Forex. So it's going to be very interesting to see how it affects it. I know it can be very big and very impactful. Let's take a look at what news we have. So we have PMI on Tuesday. But obviously that Tuesday is also going to be the elections, right? And then we have interest rate decisions this week as well. So very interesting month ahead. I am going to mark out the premium PD arrays that we're trading around currently. If you remember in last week's video or a few weeks ago, I did bring our attention to this bearish order block here on the monthly. So I am still paying attention to that. Why? Because I'm allowing price to trade into the 50% level of it. So 50% of that I'm happy to get traded to. Any higher than that, I'll be a little bit suspicious. But I'm happy for that to be the very highest we trade to, and then ideally return at that point. Obviously, we got a reaction at the open, typical for price. But as we know, when price hits a price level, if it's going to reverse at it, it will do something like this. You'll trade to it, pull out, and then it will trade deeper, and then we'll get the reversal we're looking for. That's generally how price acts. So if we're assuming that this open is that we can look at this first trade into it here would have been this. That wick would have been this, and then it'll be interesting to see if we can now run that high, trade a little bit deeper into that fair value gap, and then use it to trade away. So that's just an idea that is, based off ICT concepts and how price should be trading. Obviously, this is a much higher time frame, and there's lots of things to consider. Like I said, interest rates and elections. So yeah, again, this is my first time witnessing it, so I don't know what to expect. Accuracy will probably go down the drain, but there's still a certain level of precision we may be able to get. So we got monthly mean threshold here. Ooh. Like so we'll get that. So this is a very high frequency price trade, and then obviously I'd like to think that we can pull back. Now I'm not looking for any discount PD arrays right now. Why? Because I'm happy to have an up close week on the first week of November, knowing that we're likely going to be creating the high of the month. So that's fine. We can look at this as a monthly high for buy side liquidity. So there's significant liquidity residing above that. Why? Because it's a monthly high. So although it was only made, was it last week? But my point is, it should still be significant. And then if we drop down to the weekly, we can take a look. So we had a bit of an ugly week in terms of candle creation, but one thing we do have is a inversion fair value gap that should be able to help us. So between this low and this high is a fair value gap. The fact that we traded through it, closed above it, came back into it and left it, means that this should now act as a bullish order block. So if price does manage to trade back down into this range, I'm looking for price to repel away from it. And to help us with that idea, we can look at this long wick created last week, and I'm looking at the 25% level and 50% levels. So let's just get those marked out. Uh, 998 red dash. This is what we call weekly consequent encroachment. And then this is weekly 25%. If you haven't dropped a like yet, guys, do drop a like. It does help. So make this dashed as well, and we'll also make these a bit thicker because they're weekly. So here's buy side liquidity up here. This is that level I was talking about, and you'll see how that also lines up with a weekly fair value gap, which is interesting. So we have levels and swing highs, which I do like the look of in terms of for price to be trading up to in general, here, and then this is a fair value gap, which is perfect because, like I said, it lines up nicely with a monthly mean threshold, which is convenient. But nonetheless, as we drop down to the daily 4 hour, we'll be looking at these levels here and here on the lower time frames to try and find PD arrays that price may want to key off to then use that to trade on higher, assuming we are going to be pushing into those premiums. So let's go to the daily, and you'll see we traded down into this bullish order block. We got a very strong reaction away from it last week, and now that's activated. That's then triggered this to now be the next bullish order block, which just happens to be laying between that 25 and 50% level I was talking about. So let's get that marked out. There's going to be a lot of levels on the screen, and we'll put daily bullish order block. So we know now that moving into Monday and Tuesday, when the low gets created, if price trades into this, we can anticipate a reaction to help it push on higher into our premium PD arrays. Here's also a bearish order block up here, but I'll be looking. If we get through this high, then it's like very likely we'll run this high, right? And if that's the case, then we're going to be trading up into this bearish order block. So once we get above that high, if I was still in a position, I'd probably take off some above this high, and then I'd let price run until it hits this, and then I'll probably either close it out all, or if I think it's going to trade on higher, I'll let it run into that fair value gap I was talking about, which is fine. Nonetheless, I'm not too concerned about this. The fact that if this high gets taken, this high will probably get taken. I'm going to get rid of this because this is the main high which I'm going to be focusing on. So I hope that makes sense. And now let's drop down to the 4 hour and take a look. Oh, before we do that, actually, I do want to bring our attention to something. Remember, this is an inversion fair value gap from the weekly, right? Or monthly, was it? But my point is, if we look at the 50% level off it, and this is why I always bring our attention to it, look at how volume is respecting it. Yes, we wicked down below, and we traded to the 25% level off it, which is also... What? Yes, we traded down to the 25% level, and look at how price respected that. You can't make that stuff up, guys. What's the low of this? The low of this is 103.679, and then the 25% level is 680. So, price is referring to these levels, these 25% levels of ranges, which is why it's good that we can use them and apply them when trading and helping us with setups. Nonetheless, let's go to the 4 hour, and you'll see our price came down. Beautiful relative equal lows below here and here. Grab those, wicked right back up on the back of non-farm payroll, and it started to push higher. So Mondays after non-farm payroll do tend to be quite aggressive and full of movement. So early, maybe in the London session, I'll be happy to see price drop a little bit below that midnight open, and then I'll be looking for longs on dollar, expecting it to run out again into our buy side liquidity targets and try and work its way up to here and start filling in these ranges such as here. So there are there's imbalances up here that I do want to see get traded to. We will take a quick look at the hourly, nothing crazy here, but we can identify the breaker. So it's the last up close candle before the down move, and you'll see how that resides just perfectly on that daily bullish order block level. So I'm happy for price to drop all the way down here again. It doesn't need to do it, but if it does, I'm happy for price to drop into that before we continue to see that, until we see that continuation that we may be anticipating. So that's everything on dollar for now, for the weekly anyway, for the weekly review. Obviously I'll be back tomorrow, but yeah, let's go on to GBP USD. Now GBP's been misbehaving quite a bit, especially last week, but nonetheless, let's take a look at price. So if we're expecting higher prices on dollar, that obviously means we want to see if GBP can push on lower. Now where exactly do we want to see it push to? Well, we have this large gap here, or wick right here, and we also have a bullish order block down here. So I'm happy for price to trade down into this range. I'm not going to draw out the entire box just because it gets messy, but we know it's this range which we're looking for price to trade to, and there are levels within this range, such as the 50% level, 25% levels, that we can use as like indicators for us. So once it reaches this, we're like, okay, cool, next level here, okay, cool, next level here, okay, cool, next level here, etc. So you can see how we can grade fair value gaps, which is what I always do and ICT taught. So we'll move that to the right, get rid of this, get rid of this. So in terms of wanting to see downwards price action, this will be my first, ideal target for price. If we're going to be having yeah. So let's go to the weekly, and you can see we've been having down close weeks for the past five weeks, which is craziness. Nonetheless, we still have a fair value gap here between this high and this low. So there's still, an imbalance there that needs to get filled, which is more reason as to why we're happy to see price reach down there. In terms of the highest I want to see price trade, I am looking at this long wick right here. Ideally, price shouldn't need to rally back above there, because it should act as like a bearish order block, so to speak. So I'm going to just draw our attention to the 50% level of it. Any higher than that, I'll be suspicious, and this is all assuming it stays in line with dollar. So let's get this marked out. We'll make it red, and we'll call this a weekly consequent encroachment. And then on the weekly as well, you can actually see there's a rejection block level here. So to be honest, I'm not really too interested in this. I'm going to get rid of that. I'm more interested in this low right here. So I'm going to mark that out as buy side liquidity. Sell side liquidity, sorry. And just because it's in a rejection block level as well, so there's more reason as to why I want to see price push into it. So let's go down to the daily, and you can see some interesting displacement here. Again, last up close candle, you can see how we wicked into that and traded away from it. So again, Mondays after non-farm payroll tend to run and can run quite wild, so we need to allow for that. We're looking for the breaker, high, low, high displacement. So this low right here, if price manages to trade back up into there, that could give us some nice setups to help them run lower into our sell side targets, such as here. Now obviously this is easier said than done, but this would be the breaker low, which should be sensitive to price. You can see how we traded back into this bearish order block, turned, and again this level in general, I wouldn't be surprised if London session it might create the high of the day or something at this level, and then price continues lower. Especially with all this consolidation, for price to get back through this consolidation, it would need something crazy to happen. So I'm not really anticipating, anything higher than this high. If it does, whole nother story. But my point is, I'm looking for that push lower in line with us wanted to see dollar, remember, trade on up into its premiums. So let's go to the 1 hour. Maybe we'll be able to find some more specific PD arrays, and you'll see there's a fair value gap that lines up with that breaker low right here. Very interesting, right? So again, if price rallies into there, that could give us a nice setup. Stop loss above here, and then our target would be relative equal lows below here. Take off maybe 50%, and then we could take off our full position below there, assuming all goes well, and it is as much as a voluminous or volume filled day that we're expecting, but again, it's election week, so I don't know. I don't know what to expect. So that's everything on pound. Sorry, very interesting consolidation right here. I'm going to drag this out because I just want to show how price treats these consolidations. You see how we return to it? Look at that, 50% level exactly off that consolidation, and then we'll look what happened. Price side falling away. So we're looking for some kind of manipulation. It doesn't have to do it. Price can just run it and just drop straight out of bed. That's fine. But if we get that manipulation, that Tudor swing, which it might not even do, like I said, especially with displacement like that, over that breaker like that. Anyway, my point is, we want to see continued weakness, and then we have a nice target right here. So that's going to be everything on pound. I hope that all makes sense. Whether I have hope for us to return back into here, not much, to be honest. Just because, again, displacement like that on that heavy movement down through the breaker level, price probably doesn't need to return back to that imbalance for now. So, it's the Asia range is what's going to give us some way more insight and potential setups. But let's go to the Euro USD. We'll get rid of all these, new week. And we'll go to the monthly and do the exact same thing. So now Euro's looking a little bit more supportive of our downwards price action. You can see how we took out that monthly low, my next low would be here, which is also a rejection block level as well. So similarly, we've got sell side liquidity there. And then in terms of rallying, again, I doubt we're going to get much of it. But yeah, there's not, monthly's not really giving us much. Let's go to the weekly. And then what's interesting to me is this bullish order block right here. Now, order block, all of ICT's PD arrays can be reversed. He's said this once, but this is an example of that. So it's a bullish order block here, and then we traded into it and used it again. But how did it act as a bearish order block? Because we traded into it and left it, also filling a premium imbalance and still left it. So when we're seeing things like signatures like this, fair value gaps like here and here no longer matter, because we've filled this one and we've left it. So this is now going to act as a very strong line of defense that's going to support our idea for wanting to see lower prices. Nonetheless, the low of that X bullish was the low of that X bullish order block may be used as a nice, area where PD arrays may form that we can key off. But what I'm going to do is I'm going to simply, just to make it a bit cleaner, I'm just going to look at last week's wick, and we're just going to do the same thing. And we're looking at that 50% level as the very highest. I'm happy for price to trade. Any higher than that, not ideal. 25% level, I reckon we'll trade through it, but we'll see when we drop to the lower time frames. And then, like I said, this is a fair value gap, but we assume that it's a bearish fair value gap because of how price treated it last week. Weekly, cut the quick cut, excuse me. Ooh. That's the right. Cool. And then obviously we have these lows, weekly lows, as more near by low hanging fruit. So let's go to the daily now. And you'll see we traded higher, and look where we turned in that fair value gap. 50%. Can't make this stuff up, guys. Beautiful displacement. This is now a bearish order block, simple daily bearish order block. So now what I'll be doing is any kind of setups, if we do rally tomorrow, because like I said, we don't have to rally, as in that manipulation phase doesn't necessarily need to take place, especially if it's heavily bearish. If price is heavily bearish tomorrow, price will just like run, you'll see it. This is better because that means that run, if you get in during the run, maybe on a retracement or on the redistribution, it will move smoothly, it will run quickly, it'll be very low resistance. If that manipulation phase does take place, don't get me wrong, the run will still happen, but it'll probably be a lot more it'll probably take a lot more time and be a lot more high resistance in its delivery, which is fine, because ideally the setup forms there. It's just that if it doesn't, that means we're very bearish, we need to get in, and it will be a lot smoother. But again, we can only wait and see. Where are we trading to? Well, we got some daily lows, that's some nice targets. Let's go to the 4 hour, and you'll see again, look at the last down close candle, high, low, well, high, low, high. This range that we've already drawn out is a breaker, basically high, low, high displacement. So any kind of retracement into there, I'll be looking for setups, assuming, and then I'd put my stop loss probably within this bearish order block. Where am I looking for? Daily lows, beautiful relative equal lows below here. It's gonna be liquidity below there, and then I want to see if it can reach down eventually into our I think it's like a weekly low down there. But yeah, like I said, the opening tomorrow will be very interesting and very telling of price. High, low, high, another breaker right here. So again, price may want to rally one more time into here. Ideally, this fair value gap right here gets left open. That would be nice, very nice signature that we're going to see lower prices. It can get traded to, but my point is, if that gets left open, that will be my breakaway gap, and that will indicate to me that price is going to keep going. But yeah, interesting consolidation, and like I said, Asia will open our eyes a lot, and then London session, if we're not already in the depths after the discount by London session. That should be a nice setup. But I'll probably be paying attention to Asia as well. So that's going to be everything, guys. Hope you found this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord. Yeah, definitely leave a like. It helps a lot. And I'll catch you guys tomorrow. Peace.